Oh man, meet Kevin. Why you gotta do us like that, man? So for those of you who don't know, the market has been particularly weak over the last week or so. We've seen Bitcoin heading down to really scarily low numbers, and now we're seeing some popular YouTubers, the first of which, Meet Kevin, who has an audience of 1.8 million roughly on YouTube, has just sold all of his stocks and crypto. So we're going to go through that in that video. I'm going to give you my views and react almost to what he's done and what I think is going on here, and I'll give you my view on what I'm doing in this market. So let's get straight into it, because Meet Kevin, we know I'm a big fan of Meet Kevin, just to put that out there as well. I think he does amazing things. I think he has a great amount, he does a great amount of research from a macroeconomic point of view, and I really respect his opinions on stocks and the macroeconomy. But I do have to admit that from a crypto perspective, he is very new to the crypto space. He has very little experience in the crypto space, and from watching some of his movements, he is primarily a trader. Okay, so to put things into perspective, he sold 20 million of stocks and crypto, I believe, on Friday before the close, totaling probably about 650k roughly of crypto. So I think he had about 130k in Bitcoin, about 200k in ETH, probably 250 in Cardano, and then some in DOT, Sol, and I think Tezos, right? So probably about 3 or 4% of his 20 million was sat in crypto, and he sold the whole lot. So that's got a lot of people worried. A lot of people have been following him because the way, I openly follow Meet Kevin and his content. So for those people that do follow his content, they have started to panic, right? Particularly from a crypto perspective, but we need to put this out there because Meet Kevin's strategies primarily focus around stocks. His experience over the last 3 or 4 years have been investing successfully in stocks. And the other thing we have to point out here from a stock perspective, and we'll come on to it, is we did have a crazy market in 2020 and 2021. So we will come on to that very shortly. So yeah, the question arises, why has he sold his stocks? Why has he sold his crypto? What is his plan? And the reality is his plan, and I can get into the details because he has a fairly lengthy video on his channel explaining why he did it, and he refers to World War I and the Great Depression in 1929. He also refers to the internet bubble in 2000 and said, look, it took 14 years after 2000 for investors to break even. And, we can spend time on that and say, look, the context is not the same. To refer to what we're going through now post a pandemic versus, what happened emerging from World War I is very different. On the one hand, you're coming from a world war where the morale is down of the economy, confidence is low, income is low, versus a pandemic where with unprecedented amount of stimulus printed, where we know saving rates were super high, we know amounts of money in people's bank accounts is high from this stimulus. So you cannot compare it, right? You cannot compare it where people still have jobs, unemployment is still low. You cannot compare this to a World War I situation, first and foremost. And then the same with the internet bubble. You can't compare these types of things. It's not the same as a pandemic with unprecedented amount of stimulus, but that's fine. Right, we can keep that there. That was his rationale, because I actually agree with his premise. I just didn't agree with the explanation of how he got there. So then he goes on to explain, the bits I agree with from a macroeconomic perspective. We have a whole bunch of fear catalysts. I've said this in my videos over the last few days when crypto fell through the 40,000 mark. I said, look, I don't see this getting any better anytime soon. Right, this is an old man moment, and we need to rotate into our high conviction plays. That was my non-financial advice, because I did say I don't see things getting better in the next 3 or 4 months because we have a lot of negative catalysts and not necessarily many positive catalysts to counteract that. So when you look at some of the negative catalysts we have, we know there's been a chip shortage and a shipping shortage, which has led to inflation. We know there's been COVID with Delta and then Omicron causing issues. And now moving forward, we've got a whole bunch of concerning dates which can only really lead to downside. That's what people are feeling right now. So with January 25th, you've got Jerome Powell speaking after the FOMC meeting. You've then got March 10th, the CPI reading, followed by March 16th, another FOMC meeting. Now, I believe the market's already priced in the first rate hike, right? The market assumes that on the 1st of March, March 16th, we'll see the first increase at 25 basis points. But some are now worried that might be a double hike, right? 50 basis points. Now, The other concern is, what if they go a little bit earlier? What if on the Jan 25th meeting tomorrow, they decide, oh, the market's overheating, we need to increase rates now, or we need to speed up our tapering even faster? These are the concerns in the market. He also talks about earnings, and I completely agree with this point. The earnings situation we face, we are damned if we do, we damned if we don't. Because if earnings come out positive from a company, first of all, nobody cares about the Q4 earnings, right? Because if the Q4 earnings come out positive for Q4, then you're just giving further fuel to the fire to say that the market is over inflating, right? It's overheating, and that the Jerome Powell may have to do something sooner. So it's not a positive. If you have bad earnings, and obviously you had bad earnings, what's going on? The markets will be heading into a recession. What's going on? Are we in a prolonged depression? What's going on? Right? So you're damned if you do, damned if you don't. The other thing which is really important is the catalyst we saw from Netflix at the back end of last week. And this is partly what triggered in Kevin, I believe, his reaction to really, decide to start selling his portfolio out. Because the Netflix earnings came out, they did really well in Q4, but their forecast on Q1 was really low. Okay, they weren't able to forecast the growth that the market was expecting. And for that reason, Netflix took a massive hit. And this sets the scene for some of the earnings to come this week and next week, because we're in earnings season. And so, straight away, we can assume that doesn't matter what earnings you provide, the market is just going to keep punishing you. And we know not everybody's going to hit earnings like Netflix, but Netflix still got punished just due to a weaker forecast. So these are the concerns that he's facing. And this is what has led Kevin to believe that within the next 60 days, and this is his bet, he's placing his 20 million bet on this. Within the next 60 days, we will reach peak fear. Okay, that's his view. His view is that we will reach peak fear. Now, what his bet is he's saying, if we're going to reach peak fear in the next 60 days, then what I want to do is I want to exit all my position. I'm going to sell 20 millions of my stocks in crypto, and I'm going to try to re-enter at the bottom. Now, let's do the reverse calculus of this. If he sold 20 million of positions, and let's assume he does some tax loss harvesting and he shaves the bits off left and right. Let's say he has to pay 20% tax, maybe 30%, let's call it 20% tax. He will need to pay 4 million in tax just for selling all of his stocks. So his bet, whatever the bet is, has to make him at least that back, the 4 million back. So he needs to lower his cost basis through this trade he's making over the next 60 days. He needs to lower his cost basis by everything by about 20% just to break even. So in other words, we can assume that Kevin believes that the market still has more than 20% downside remaining. Okay? And so he's waiting for that downside to play out through these negative catalysts, which we've just spoken about, before he's able to re-enter his 20 million quickly and fast and deploy it straight back into the market. So what's our view on this? What do I think about that? Well, I think most of you who've been watching my content will know that I highly recommend against trying to time the market. But every situation has nuance. Every decision has nuance. And that is why I'm not going to come out here and say what Kevin's doing is wrong. Because for him, it actually seems quite right. You got to remember, what is the context? He's a YouTuber, right? First and foremost, he's a very notorious YouTuber. He's going to get 60 days of notoriety. That video he just posted had 400,000 views on why he sold everything. So we've got to understand there's revenue coming from that. There's sponsorships coming from that. Okay, so I don't mean to be a pessimist or, some sort of conspiracy theorist. I'm just telling the facts, right? I still believe he wants his investment decision to make sense standalone, but these are hedges, right? If it goes wrong, if the market falls by 20%, he enters his cost basis 20% lower, he breaks even. But if you're getting 10% of that difference from improved YouTube revenue over the next 60, 70 days, 80 days, 90 days, and no doubt he'll hold that retention because he knows what he's doing on the space, then that offsets some of the risk from his investment decision. Very important. The other thing that comes with being a YouTuber, which is why we cannot, why I cannot give this non-financial advice to everybody here to try to time the bottom, is he has full attention on the market. This guy spends every single minute on the market, right? He's 8 hours a day in front of the computer. He can execute trades quickly. And so when it comes to deploying his 20 million back into the market, he's ready to do so. And I can tell you, he's already started trading crypto today based on futures showing green. He's trading in and out, trying to make percentage alpha there. Okay, so you got to understand, you can't just read a headline from a YouTuber and try to associate it with where your position is. You have different circumstances, you have different nominal amounts, you have different goals, you have different situations going on. Let me give you another factor that makes a massive difference. Meet Kevin will be refinancing his real estate portfolio. Okay, so when he buys the dip, he's going to be buying the dip with more. He's not just putting his 20 back in. He'll probably put another 4 or 5 million from refinancing some real estate back in at the lower cost basis. So when things then rise, he's not actually just putting 20 back in the market. He's putting 25 back in the market. Okay, so you need to take that into consideration as well. Really important that we understand these nuances, because your situation and my situation, somebody else's situation are not the same. Doesn't mean he's wrong. So you can't just go out there slandering him and saying, oh, this is silly, you're a paper hand. It doesn't work like that, right? It's different, it's nuance. And so if he believes strictly that the next 60 days is peak fear, and he believes he has the experience, he's been in the market for a while, okay? He believes he can time that bottom. And I'll give him credit. He's quite good at timing, right? He's very tuned into the macroeconomics, which most crypto investors are not. Okay, so he comes with a lot of that stock experience to bring into crypto. He understands, I wouldn't say his technical analysis is the best, but he started to pick up some, so he can understand some of the technicals to kind of give it a blend. But he's definitely very well versed in the fundamentals. So, his ability to time that is there. He can do it. I mean, in 2020, he refinanced and started off with about 3-4 million, threw it into the stock market. That 3-4x'd, right? And that's how he got to the size of the portfolio he's at now. So he places these outsized bets. He's got a very large risk appetite, and so it's right for him. But does that mean it's right for you? I know what I'm doing, and in this market, I am not trying to time my entries. I'm holding my positions. I have only high conviction plays right now. These are conviction plays which I believe in. And this is why some people are giving me Kevin stick, because he was saying the same, right? He was saying, oh, these are all high conviction plays. These are long plays for me. But the reality is he's taking a risk and selling them to rotate back in. Now, the other thing to note is he is selling a lot of his larger positions, okay, some of his more stable positions, and he wants to rotate, and he said this in his video, he wants to rotate that 20 million into about 10 picks of good small caps. So he's placing an outside bet to come back into the market in the likes of Lemonade, in the likes of maybe Corsair or Tattooed Chef or Shift Technologies or these kind of stocks, the Russell 2000 stocks, because he expects them to 4, 5, 6x maybe when the market starts to pick up from the low cost basis he's going to try to enter in at the very low, because he's going to be watching the market every single day, waiting for the FOMC meetings, waiting for the CPI readings, waiting for the PMI readings, and trying to time that in. And no doubt he's going to do the same for Bitcoin and crypto as well, because he understands that the Fed, Jerome Powell, CPI, all of these macroeconomic factors have make a difference to the stock market, have an effect on Bitcoin, and therefore he'll time his entry on crypto as well, no doubt. So again, really important we take all this nuance. I personally am not timing that dip. I'm not doing that. I know so many people who, if you ask them, very experienced people who've been in the market a lot longer than I have, in crypto and in stocks, that will say to you that the biggest mistake they've made is trying to time this market or any market, trying to time a market. They've made the right bet, they've picked the right stock, but because they try to time it, they then mess up their psychology and struggle to get back in. I'm not saying Kevin's going to do this. He's done stuff like this before. He's well versed in psychology. He manages his psychology. No doubt he'll have a plan and he'll stick to his plan. But for the average person who goes, oh, he's sold, I'm going to go sell too, and time it in when he gets in, guys, that's quickest way to get yourself in the red, okay? That's the last thing you want to do. You want to do things from a front foot, not on the back foot. So my advice of, if you have high conviction plays, stay in those, right? If they're high conviction plays, not financial advice, they're the ones that you want to hold because you have high conviction in them. You won't be scared to buy the dip, right? But you got to be careful of how far that dip goes, right? You need to pace yourself on how far that dip can go. Really important. And I think that's why one of the reasons the market is really struggling right now, even maybe Meet Kevin struggled as well, because he went really heavy on the first layer of the dip. He went really heavy on the first layer of the dip. He made that very public in his videos, and he didn't expect this next layer of the dip, the chocolate fudge cake. He didn't expect this second layer. He's run out of cash, and now he needs to rotate back out, okay? And that's why he's come up with this strategy. He didn't want to go down the route of, he did try playing around with a few hedges and going short the market, but now his view is to just sell everything, wait for the low point within the next 60 days. He feels there will be a peak fear moment, and then he's going to throw all 20 million back. And that's the thing. He's capable of doing that because he's watching the market all day. He can time that, and he'll be back in the market very quickly. And no doubt in between then, as well as all the YouTube benefits he gets, he'll also be trading the market as well with that cash as well. Okay, so he'll be able to trade that as well. Ultimately, what is the point of this video? What's my non-financial advice to you guys? It's let's not follow these public YouTubers, right? These YouTubers who are selling or panicking. This is not what you want to do, particularly as what's the right word? As a modest investor. Maybe you have a modest amount. These guys are talking about millions in their account, right? They have to have different strategies. They have different scenarios. They have different strengths. They have different weaknesses, and different areas where they can capitalize on things. Like I mentioned about YouTube or real estate, or we know with the case of MEETKEVIN, he needs some cash for some of his business operations. Different circumstances. But if you're the average lay person, you've invested in crypto, you've got high conviction, you've done your research, there is no particular reason for you to panic right now. I personally held my Bitcoin and continued to buy Bitcoin at 29. Not financial advice, but I did, right? So there's no right or wrong answer. There's just the answer that works for you, that works for your psychology, and the one that you can execute upon without panicking. That's the key. Everything needs to be done from a rational point of view, not from an emotional point of view. So whenever you see anything, make sure you look at it, make sure you understand it, make sure you try to really understand the nuances of why somebody's doing this. It's easy for me to just go, oh, what's Kevin doing? He's a paper hander. But no, there's nuance to why he's doing what he does, and there's a reason why it can work for him. Doesn't necessarily mean it's gonna work for us. Okay, so there you go, guys. Long story short, I still expect the market to be really, what's the right word? Really tentative and really nervy over the next few months. We still have the catalyst, like I said. Earnings season is going to be a problem. Damned if you do, damned if you don't, right? We've still got the issue of how the Fed manages this balance between overheating and underheating, and they need to keep that balance in check. Completely agree with these macroeconomic situations. We've got the FOMC meeting tomorrow on the 10th of March. We get the CPI reading for the month previous, which would be Feb, and then you have your another FOMC meeting. So all eyes are on these rate hikes and the ability of Jerome Powell to calm the markets. But right now we can see we're in a complete risk-off mode right now, and people need to understand this. Crypto is but a risk-off asset right now. I know us in the market really do think as though, it's completely decoupled. We understand crypto. There's so many use cases. I get it. We're supposed to think like that. That's how we can push on the adoption, right? It's our job to do that as the people who are here early. But for those who aren't, you've got to understand, if you're an institutional investor, you're a hedge fund, you're putting 1 or 2 or 3% in crypto just because your clients in a risk-on mode are saying, why don't you have any Bitcoin? So they allocate it. But then right now, when risk is off, those same clients are phoning saying, you better be protecting me. You better not be having any crypto exposure. What are you going to do as a hedge fund? No, we got diamond hands we're holding. No, you've got these massive net worth individuals, ultra net worth individuals. You're not going to do that. You say, yes, sir, done. We've sold the Bitcoin. We're in bonds and we're in banking stocks right now. That's how it goes. And that's moving the crypto market. It will move the crypto market. Okay, because it's not just you and I who believe in Bitcoin over the long run that are holding Bitcoin. Yes, there are high net worth individuals that do hold and hodl their Bitcoin, but equally there are these funds rotating in and out and treating it as a risk on asset class. Is what it is. That's how it goes. We need to be cognizant of that. We need to understand that when building out our investment strategies. There you go, guys. There is a breakdown of MEETKEVIN and why he sold all of his crypto and my view on it. As always, guys, don't forget to hit the like button and subscribe. If you appreciate this type of content, then please do support this channel. If you want to support this channel a little bit more, consider hitting that join button and becoming a member of this channel. That way you'll be able to support me, but also as a perk, you'll get access to our community thread where you'll get to ask me questions on your favorite coins and crypto. So particularly in this tough market right now, that is a great way for you to ask me questions, pick my brains and my experience to get you some non-financial advice of how to tackle this market. As always, guys, thanks for watching. Link in the pinned comment will be the link to the free public Discord server. Let's head into there, chat about this. If you want to chat about MEETKEVIN or any other influencer and what their strategies are right now and how they're making you feel in this market, because it can be an anxious time. If it's your first time, it can be really anxious. So head into there, meet like-minded people, chat about your strategies, ask questions, be inquisitive, and that's the way we'll learn and grow through this market. As always, guys, thanks for watching. We'll see you in